A company designs its own clinical trial, runs it, pays for it, and the results come back proving that its biggest competitor makes a better product. That's exactly what happened to Novo Nordisk this week. This wasn't just a trial miss. Novo lost something more expensive: narrative and identity. The story of "we still lead this market" broke, and the market switched Novo from leader to challenger. Once that role changes, the pricing model changes with it. On February 24th, Novo's next-gen obesity drug, CagriSema, posted 23% weight loss over 84 weeks. Solid, until Novo's own trial showed Lilly's Zepbound at 25.5%. The market's verdict was instant. Novo down 16%, Lilly up 5%. Since its peak, Novo has lost roughly $475 billion in market value, back to levels before Wegovy transformed it into Europe's most valuable drug maker. Novo didn't get beaten by Lilly's data. It got beaten by its own. For years, Novo was priced on one story: "we still lead this market." CagriSema was supposed to prove it. After 2 trial misses, the market rewrote Novo's pricing model. First, the market deleted the assumption that CagriSema could be Novo's next growth engine. Not downgraded, deleted. Second, after a second trial miss in just over a year, Novo's pipeline credibility was cut hard. 1 miss can be explained. 2 misses change the question: from what went wrong to why should we still believe? Third, and biggest, the pricing framework switched. Novo went from leader to chaser, from expansion to defense. Wegovy becomes the line it has to hold. That's a role switch. And in winner-take-all markets, role switches are step changes. In obesity drugs, finishing second isn't a linear loss. Doctors prescribe the best-performing drug, so once a trial quantifies the gap, new prescriptions tend to skew hard toward the winner. And Lilly is already well entrenched. That shifts pricing power. Leaders price on value. The number 2 prices to compete. And that gap compounds over time. Pricing pressure eats into profits, which leaves Novo with less capacity to reinvest in the next round of competition. Even pipeline value changes. In a leader's hands, a drug candidate is a growth option. In a challenger's hands, it's execution risk. Same molecule, different valuation. Before this week, Novo was priced on a leader model. Wegovy's cash flows plus a category leader premium, plus pipeline value for CagriSema and what comes after. The new model is simpler and smaller. Wegovy's cash flows get discounted as Zepbound takes share. Pipeline value is near zero until proof returns. And Novo takes a structural discount because the market now treats it as a challenger, not a leader. Deutsche Bank summarized the shift directly. The diabetes and obesity market is now likely to coalesce around Lilly's portfolio. This goes beyond one drug. It's a call on which company now owns the center of gravity in obesity treatment, and right now the market is pointing to Lilly. So what can Novo's CEO actually do now? Fewer things than before, and all of them harder. The acquisition playbook is essentially frozen. Novo already lost the bidding war for obesity biotech Metsera last year. With roughly $475 billion in market value gone, using stock as acquisition currency is far less attractive, and acquiring promising pipeline assets becomes much harder. The CEO doesn't set pricing freely anymore either. The market does, and pipeline capital allocation gets harder too. After 2 trial misses in just over a year, every major pipeline decision now faces a higher burden of proof, internally and with investors. Now, is this a permanent framework switch, or did the market overreact? Watch where the money actually flows inside Novo. Not what management says on earnings calls, what they fund. If CagriSema's budget gets quietly reduced, or Novo starts reallocating capital toward defending its oral obesity drug window before Lilly's rival pill arrives in April, that means they've already accepted the role switch internally. And watch how the market responds to good news. If Wegovy beats expectations next quarter and the stock barely moves, the framework has switched. Good news is being filtered through a new, lower valuation lens. The bull case still exists. If CagriSema produces genuinely superior data in a specific patient subgroup, or if Lilly stumbles on supplier safety and the market responds by restoring Novo's old valuation multiples, then today's drop looks more like panic than a verdict. But the market has already made its first move. It's pricing Novo as a structural number 2. In winner-take-all industries, the difference between first and second isn't just market share. It's valuation language. First place gets priced on potential. Second place gets priced on proof. And when the market decides you've crossed that line, the repricing doesn't happen gradually. It happens all at once. Novo built this market. Wegovy was a real breakthrough. The question now is no longer what Novo did. It's whether Novo can prove, not promise, that it still belongs in first place. Until then, the market has already chosen its language, and it's not leader pricing. Thanks for watching. This is the Fiscal Ledger.